I remember a time in my trading journey where no matter what I learned or indicator I used, I kept on losing money. I felt stuck and I even started to blame myself for being impatient until I realized the problem. I was missing two important conditions, and on top of that, I wasn't entering trades the right way, and no indicator in the world was going to solve that. In this video, I'll be sharing the two conditions and the right way to enter trades along with live examples so that you can save yourself the trouble and some money on your trading journey. So what is the main problem? Number one, you take a loss on a trade and then you sit down and you watch it move in the direction you planned. That can be very frustrating, which then leads you to number two, you take small profit on the trades and then you watch it keep climbing after you've exited. The problem is not that you lack knowledge, it's just that your entries are hurting you. And as a trader, if you're losing a lot and your wins are small, you will be negative. And that can have you feeling like you're stuck. You've taken in so much information, yet nothing is working. So in this video, I would go over two scenarios on how you can enter trades. And I'll show you examples so that you can put the knowledge together and you can apply it and implement it for yourself. Now, the main objective here, we want to be able to enter trades and manage the trades with confidence. Before I move on, I'm just going to explain the scenarios briefly before I start showing you the examples and the conditions. So we're going to think about it like this. You have a scenario and you have your action. The scenario A entry model is the classic entry model that you want to follow once you see it. It's like the textbook entry model I'm going to show you using examples. And then scenario B is just think of it as a backup if you do not see scenario A set up in a clean manner, a perfect manner, a textbook way where it's just bang on, then you have scenario B to rely on. And when you have scenario A, you take action using the entry model I'll explain to enter your trades. And then when you have scenario B, you will use the entry model I would go over. And that's where you take action B. Now, before we start taking all those trades, there are conditions that must be present. What are the conditions? Condition number one, price must be above the opening print if we are looking to buy or go long or buy calls if you're trading options. And price must be below the opening print if we are looking to sell or short or buy puts if we are trading options. Condition number two, if price is below the previous day's close, we want to look for shorts or sells. And if price is above the previous day's close, we want to look for buys. So when we have these conditions present, then we can then apply the entry model that I'm going to go over shortly in the examples, and we can take trades. This first example is for entry model scenario A. What I'm going to do is to play out the first 5 minutes. We're going to mark out the opening print so we see if our condition is met. Right here, you can see that our condition is met for upside trades because the opening print is right here with this purple line. I've marked the opening print and price is currently above the opening print. So we can look for what? Buys at this point in time. But now, how do we enter this trade though? I'm going to go down to the 1 minute time frame. The first 5 minutes has played out. It's a strong trend to the upside, and based on my analysis, you can see that we have a gap to fill towards the upside right here. But where do we enter this trade? What I'm going to do next is to simply mark out the high of this 5 minute range. Mark out the high. I'm going to change the color of that candle so we know that that's the high of the opening 5 minute range. So once we mark that out, we're going to play it out and see what happens and see if we can find an entry so that we can target at least a 1:2 risk to reward, or even this gap fill level that can serve as the next resistance. So now let's play it out and see if we can find an entry. So we have seen that price has broken above the 5-minute opening range high with a strong bullish candle. Now, where do we enter though? We're seeing that we're getting a small pullback, a red candle forming, right? Right here, you can see that, oh wow, buyers are stepping up. Where do we enter this trade? So now we've seen confirmation. This candle here was an indecision candle, but the next candle that followed right here, so just so you can see it, this candle that followed right here showed buyers are holding price above our 5-minute opening range high, which shows that, okay, we can look for an entry once this candle here closed. Wait for the candle to close, of course, and our stop loss would be a break below this candle's low because of price action. That was a higher low that formed right there. So if price breaks that higher low, we'll be out of this trade, and then we can target a 1:2 risk to reward. And then I'm going to play it out and we're going to see what happens. So as you can see, we are playing this out and we have hit our 1:2 risk to reward target, and price even continued to gravitate higher. And if you wanted to hold this trade to see if we actually fill that gap and hit that resistance level, you can hold it, because what, it ended up playing out nicely towards the upside as well. As long as you have a good entry, the trade will end up working quickly in your favor and you would not get stopped out. You can see in this example right here, I'm just going to move this towards the side. You can see how price respected nicely and we saw that move towards the upside. What did we see before we entered this trade? We made sure our two conditions held nicely. We even had nice confluence because the opening print was really close to the previous day's close as well. And then we saw a strong trend towards the upside. And not only that, we then saw strong wicks showing that buyers stepped up even when sellers were trying to push price lower with this candle here. We saw indecision. Then we saw another candle confirming buyers were stepping in. And once that candle closed, and as you can see, this candle here closed above this red candle's high. Got that close there. You can then enter the trade once that candle closes and you look for continuation towards the upside, targeting 1:2 risk to reward towards the upside. So those are things to look for before you enter the trade. You just don't chase green candles, because if you chase a green candle, like entering on this green candle because it broke out, you will be scared once you see this pullback, thinking that we are going to sell. We're not really going to sell. We ended up having a good risk to reward entry and you didn't get faked out and stopped out of this trade only for it to continue. Now I'm going to show you an example going over entry model scenario B so that you can put it all together and you have great tools in your arsenal to execute your trades. So this example is for scenario B. As it stands now, it looks like we're going to be trading the upside, but we have one more condition to check out, which is the opening print. So we're going to play out the first 5 minutes and see what's happening. Once we play out this first 5 minutes, we can see that we have a strength candle that has formed after 5 minutes, and we're just going to mark out the opening print, and we're going to make sure that it's a color that we can easily spot and identify. The opening print is marked out here. Price is above the opening print, so we're going to be looking for buys, and we're going to go down to the 1-minute time frame to look for our entries. Now we see strength. We're going to mark out the 5-minute opening range high because that's a good liquidity level that price tends to respect and you can trade off of. But how do we enter this trade? We're going to just play it out and I'm going to talk you through what to look for. Now, once we play this out, you can see that price is trying to hold this level. Pause. We have a higher low right here and we created a higher high based on this price action. Now, let's continue to play out this tape. And we are struggling to hold above the 5-minute opening range high. But something that is interesting right now is that since we have this higher low, price is still in an uptrend as long as it stays above this higher low. Now, what we are seeing right here is a potential higher low. The reason why it's potential is because we don't know what comes next. If price respects and holds and forms a new high, then this would now be confirmed as a higher low. But if it fails, then the trend is broken. So now we'll play this out and see if we can find an entry. It's currently holding. If we then get a candle that closes above this 5-minute opening range high, we can then look to enter the trade because it would have confirmed that buyers are indeed stepping up. So now we would enter this trade once this candle is closed, and we would set our stop loss at this break of this higher low level, this potential higher low candle, right? This red candle, you have that stop loss. And then we can simply target a 1:2. And we're going to play this out and see what happens. You can see that we didn't have a perfect retest, but we can use price action to help us have a good risk to reward and take a high probability trade. See that we didn't have a nice fancy retest, but we used price action and we were able to take a nice reclaim of that 5-minute opening range high because price action told us buyers were stepping in. So now I'm going to play this out. See how it's playing out nicely, and we hit our target. If I'm taking upside trades, I'm probably getting 165 calls on PLTR, and I'm trading this name towards the upside. And you see how you caught a nice 1:2 risk to reward, a high probability trade. You were never in a drawdown in this trade. It respected it nicely and held the trend because we understood price action. I hope that's clear. I hope this makes sense. First scenario is the cleanest, it's the best one, but when that doesn't happen, you have scenario B to use to your advantage as long as you understand price action and you know what to look for. Thank you so much for watching. I will see you next week for a brand new video. Make sure you like and subscribe so that you can help me grow my channel.